Welcome everybody. Today is the 18th edition of our Capital Conversations. Time flies. We started this in the beginning of the lockdown, and it was just a little riffraff thing put together. Idea came from Siva, put something together, and then talked to some people, and here we are, 18 sessions, and going very, very strong. And it's been a ton of fun. Today, we welcome Kanika and Tanuj Shori, who are founders of a company called Square Yards. It's a company in our portfolio, a company that touches different vertices, real estate on one side, technology on the other side, and people on in a third vertex. It connects all the three in a very wonderful way, and it's achieved wonderful success. We invested in this company, as you know, 1 year ago, and it's been a great experience getting to know Tanuj and Kanika and Tanuj, and today here they are. Welcome, Kanika. Welcome, Tanuj.
So, thank you. Thanks, Siva. Thanks, Sammy. Thanks, team.
Thank you. So, Kanika and Tanuj, this is a very interactive session. Just some questions. They are meant to tee off a discussion, so don't feel constrained by the questions. Please say whatever you want to share, even if it's not asked. And if you want to ask us any questions back, or you have any questions to clarify, etc., always open. So if that's okay, I'll kick off with the first one. All right?
Sure.
Okay. Well, you know, some of us in the group know a little bit about how you came together. Probably one or two of us. But I know Tanuj has been the face of the business vis-a-vis brand capital for a long time. But I also know that Kanika is the founder of the business, and Tanuj went through an interview process. So tell us a little bit about the backstory of how you guys started, and also Tanuj, I want to hear from you how you got the job.
So I'm glad you brought it up, Sammy. So a lot of people don't know about this side of our story. So yeah, I mean, our journey started back in 2014, and both of us used to invest heavily into, startups, real estate, and we used to manage our portfolio actively. During that time, we used to travel to Hong Kong very often. We used to live in Hong Kong, so travel to China very often. And we saw the potential in PropTech there in form of Lianjia and eHouse, like how deep they had penetrated. And we saw back in India, like there was no organized player. The industry was so fragmented, both on the developer and as well as the brokerage side, that, there was definitely a place for an organized player. So that's how it started. And Tanuj was always involved on the strategy. So there was no interview process per se. He was an investor initially in the business for first year, and more, we went deeper into it. All our conversations used to be about Square Yards, and that's how I think he got more and more emotionally involved. And then there came a point when he decided that, I have to get on this ship full time. So then, it just happened.
Very nice.
I'll pitch in there. So I did not have an option but to be an angel investor. I think people would relate to that. I had to be an angel investor, and since I was an angel investor here, and it was the largest part of my startup portfolio, so I had to be involved. I had to continue to track what exactly they are building, how they are building, on and off. So on a serious note, on and off, obviously I was involved in management hiring. I had my inputs in terms of which way it should go. But very, very honestly, on day one, let's say I'm going back to 2014 January. If someone would have asked me, will you be running Square Yards a year from now? I would have said no. I think the one thing I grew up with, a lot of people come and tell that they want to be entrepreneurs. They want to do something of their own. Probably, I think most of the population says that. I was an outlier. I didn't want to run something of my own. I thought it was an unnecessary headache. I was doing well in my life, financially, career-wise. I was taking 2 grand vacations a year, living a pampered banker life. I had absolutely no A, intention, B, I thought capability to come and mess up with my life. It's just so happened that during the journey, during those few months, the attachment grew. Obviously, I got more and more, not just emotionally. I Kanika spoke about emotionally vested, but I think I got more and more financially vested, and that also made the difference. And more importantly, I think, but the largest reason, honestly, was the scale of the opportunity. I think on day one, even we did not realize that how large this opportunity could become. Kanika Kanika was on the verge of starting something of her own. PropTech sounded like a very good idea. So she went in, but over the first few quarters, we realized that it is not just another idea. It probably has a potential to evolve into one of the largest organizations. It has a potential to evolve into one of the largest platforms, one of the largest opportunities. And that's when we started taking it more and more seriously.
Oh, it's a great story. I have met a couple entrepreneurs in my life, and once again we meet one more, and I'm so happy to see both of you together. For that, thanks for the background, and I'm actually happy to hear that your interview process was not so hard. I'm happy. I'm happy to hear that. Now, toggling a little bit and going to Square Yards. Some of us that worked on the deal closely, including me, we know what Square Yards is. But then I don't know if I know what Square Yards is. I knew what Square Yards was when I invested in the company. It was, as you said, a large market, completely disaggregated, extremely fragmented, all kinds of sales channels, a total mess. In the probably most aggregated market in the US, even there is disaggregated. So it's a very disaggregated market, huge ability to, a huge opportunity to use technology to aggregate pieces of it and create value. Totally got it. And that was one of the key reasons we invested in Square Yards as well. Another key reason is you both. You both are tremendous leaders, and we have 100% faith in you. Having said that, Square Yards has been innovating its business model from the time we invested. I believe you have had at least 2 pivots in the last year. I don't know if you planned a pivot, but you keep going through the road and then you're pivoting. And then COVID came and Tanuj and I talked on a call, and then there was yet another pivot. And today, I don't know if you're a financial investment company as well. So there's a lot that's going on. Tell us a little bit about your journey so we'll all get a full story of how you got here.
So Tammy, you said one thing, that you knew what Square Yards was, probably what don't know on a daily basis what Square Yards is. I think that is very relevant to both Kanika and myself as well, and the entire management team. And a lot of people say that you pivot when things are not going well. I think what we'll say is otherwise you have to continue pivoting, right? You figure out, you sense an opportunity at any point in time, you sense what are you addressing, how you're capturing that market share. Does anything else make sense? You go and try that. Effectively taking those risks, failing is part of the journey. We have failed so many times that we love to fail, as long as we don't repeat that failure the second or the third time. So coming back to what Square Yards is or how it has evolved, I'll try to be crisp, although I could talk about it all night long. So we started as being a plain vanilla brokerage company, because that's what the first opportunity we saw. We went to China. Lianjia was 50% of the brokerage market of Shanghai. We got excited like a small kid who sees the toy shop, and we thought we could replicate that in India. So that was a starting point. Then we realized that NRI is a massive opportunity and a hook through which we could capture that chicken and egg bargaining power, market share vis-a-vis developers. No one was addressing that market in India. At least there were a lot of small brokerages, but when it came to NRI market, there was no one around. While building that, that's when the technology. So we became a PropTech player probably 24 months after we became a brokerage player. And that the technology's intervention was more to drive efficiency. We very strongly realized that it's a heterogeneous asset class. It's not a homogeneous asset class. So the way the digital value chain of this asset class will always be very different from a pure play vanilla e-commerce or even an auto sector for that matter. But having said that, at that point in time, we were already aspiring to be 1,000 times larger. And one of the key facets of being, or key support system to being 1,000 times larger was, can we scale efficiently well in probably 10 years, in probably 5 years to those levels. And the only hook that could help us do that was technology. So technology came as an enabler for us. Technology came as efficiency driver for us. And it became much more, obviously, as time evolved. COVID helped, et cetera, et cetera. But so till about a year and a half back, I don't know, Sammy, if you remember when we first met, probably a year and a half, close to a couple of years back. The entire discussion was around primary brokerage market in India, opportunity there, how large we could be, 100 times potential. During those last 18 months, we realized that primary is again a small section or small fraction of the overall 20-year play if we want to build. There is a secondary market, there is a rentals market, there is a property management market, and these are significantly integrated with each other. And those thought processes have evolved as and when we have run the business. Most of the real estate assets we distributed to our consumers 5 years back, they are coming for possession now. Now, as they were coming to possession, these were clients we controlled. These were our captive clients. We wanted to monetize. At any point in time, the thought process at any point in time is, how can we monetize better? How can we make more money? How can we make more scale? How can we integrate two part of the segments to ensure we are better efficient? So that's where the thought process of moving into rentals came. We came across a fairly strong team, Azuro, young team, aggressive team, but early days for them. We saw a huge opportunity. It was a marriage of minds. We took them on, and now we are pushing significant bandwidth around them to scale that business multiple times. Mortgage is a very, very important, very critical example as well. We were selling homes. We realized that 60% of the clients who buy homes need home loans. And this was a captive clientele we wanted to monetize. That's how we got into mortgage. But I think an underlying backstop there is, any business line we get, at least that's our thought process, and that's how we try and work. Any business line which we try and explore, which we try and get into, we would only go into it if we believe over the next 24 to 36 months, we could be disproportionately largest player in that segment. If we cannot be, we will not get into that business line just to add another couple of $100,000 of profit. Interiors is one such example. It's again a lot of synergies between interiors and what we do on the rentals, real estate, so on and so forth. Do we believe today, can we be the largest player in the next 24 months? No. So that's why the route we have taken in interiors is a partnership model. Could change. Probably 6 months down the line, that conviction could come. If that conviction comes, we will foray significantly into that. So nutshell, we are effectively an integrated ecosystem player when it comes to real estate, where the entire value chain journey of a consumer, right from the time he wants to buy a house to the time he takes a mortgage, to when he wants to sell the house, he wants to rent the house, how his asset gets managed during the time someone is living in their house, everything would fall under that purview of what we are trying to drive the value here.
Oh, it's a great journey. And I like the way you said, we sometimes go back and think, like the way I articulated, who we are today. And I think that entropy, that kind of organized chaos, accepting such organized chaos is core to continuing innovation. The moment we become comfortable in a certain role, certain revenue model, certain situation, and we don't change when the market changes or the opportunity set changes or something else comes in, we will perish, especially a new company. And well, old companies, and we are seeing old companies suffer during COVID because they're not able to, mature old companies, not able to pivot, not able to adapt to COVID situations, and we are seeing them suffer now. So I'm glad to see you guys are able to demonstrate a level of dexterity, flexibility, so you can come through, grab different opportunities, and go to new places and catch revenue streams and profits. That's wonderful. Now, we met a year ago, and we did a deal. From then, and prior to that, I don't think you advertised at all in an organized way.
Never.
I don't think you advertised.
Never.
So you're one of those classic brand capital companies that I talk about with the team. That you meet a great company, a great set of promoters, a great idea, and a great market. And then you just have an open discussion, and then you see, wow, media can come in and really help this company reach where they want to go. And those are the ideal brand capital companies. So you looked like that the first time we met, and then we went ahead and we did a deal. Tell us a little bit, and the other important point, as you said, a lot has changed with square yards in the last year. A lot has changed with the market as well, not just square yards. I mean, not just the last 4 or 5 months vis-a-vis COVID. That's a big change. But there's been change happening prior to that as well. So lots of change in the market, lots of change with square yards. Tell us, how have you leveraged media, and how has it been for you? How has been the experience? Has it helped you? How it has helped you? Tell us that experience.
Sammy,
Kanika, very close to your heart. Yeah.
Yes. Yes. So to tell you honestly, like when we initially started, our focus was more into, execution, getting the right team, building, a business model which is viable, which is profitable, and, getting the basics right. Getting, an infrastructure in place that once we start advertising, we should be able to, service to those leads, to those clients to best of our capabilities. So that was our thought process. We didn't want to go very early on and burn the dollars and not the product being not ready. So honestly, if we would have met like slightly sooner, probably that wouldn't have been the right time to start off branding, and maybe a year later, maybe we were too late to start off. So you guys came into the picture exactly when we needed it. It was a very thought through decision, and the synergies which we were able to bring was build a brand, and trying to build something that eventually we should become the first port of contact whenever somebody thinks about real estate. So initially it was just primary, and now with all the new verticals which we are adding, we should be able to provide a comprehensive solution to anybody's needs who is thinking real estate and wanting to do anything real estate.
So basic, and can you give us some examples as to how you use the media to get one or two, lessons learned? How did you use it? I know you tried different kinds of ads. I remember the very first ad that you were.
I have the ads in my background, if you can see.
There you go.
So this is the picture wall, the closest thing which we've done. So yeah, this gives me a lot of inspiration whenever I see it.
Yes.
And so our first thought process was to put ourselves in the market, to tell people that that the service provider matters in real estate. And because real estate journey had been significantly agnostic, disintermediated, the brand did not matter. So no one has built a brand in real estate. Let me be very candid. And so it helped us obviously because it was an empty football field, empty canvas for someone to come and get a first mover advantage. But parallelly, I think, and that's still not ended. I think that phase is still continuing for us, where the first few months or probably first couple of years is to establishing that presence that we are the service provider who you can trust. Service providers matter. Service providers can give you A, B, C, what's in it for a consumer. Why a consumer should come to us rather than going to either a small brokerage or directly to the developer or directly doing a C2C transaction. So that messaging on what we mean to a consumer is very, very critical for us in the early stages of evolution, and that phase is still continuing actually, honestly.
Yeah. Go ahead.
And your team was very helpful, Sammy. So I was always, bouncing off ideas with your team in terms of, how we should plan our media. So we got a lot of good suggestions there as well in terms of, how we should include the print, the OH and other platforms which we had. Now, due to COVID, we have pivoted again. We are, focusing a lot on digital inventories and trying to, make an impact. And I think with the times and media anyways is always so evolving. So we keep on, changing our strategies and keep on evolving depending on, where we see is the maximum engagement.
Totally.
For example, in the last in the last month, we have gone to influencer marketing, which we had never done before.
Okay.
Trying to establish. So we launched a theme, Meri Wali Home Story. It's very similar to various other themes. A lot of brands previously came with, for example, Asian Paints, Har Ghar Kuch Kehta Hai. So things like those. Where a lot of influencers, celebrities are coming in, and it's a digital media, obviously. But again, step by step, the idea is what Kanika said earlier. 5 years down the line, anyone thinks real estate, he picks up the phone and talks to Square Yards once.
No, it's a very valid point that you both said. When we first met and talked about it, we brainstormed a little bit, and I recall we said, how come there is no clear brand in real estate? And that was the same question that was asked when I was sitting on the other side in a different discussion in Silicon Valley back in the late 90s, and Zillow came out of it. And of course, there are many now. And so there is trust, which sometimes our media does a wicked job of building trust in the minds of people. And I think you guys did very well with it. I remember the very first ad. That was a big learning for me too. I remember the folders of books and we'll do your homework. I don't know if you recall that, the number of discussions that we had about it. It was great. It was a great experience. Thank you for that color. Kanika and Tanuj, now I want to pivot a little bit again in the discussion and talk about the real estate market. As you know, as some people in Brand Capital know for sure, I don't know, others may not know, I am a real estate man as much as any. I was very involved in creating India's first foreign real estate fund, IREO, which is perhaps it was the largest at that time. It still will be one of the largest in size. And I lost my share of hair dabbling with real estate. Everything went up, 2005, 6 to 2011, 12. And then we saw the plateau come and then the fall. So from 2012, I have not seen the Indian real estate market really wake up. From 2012, it went into a long slumber around the end of 2011 or so. And then I've not seen it wake up at all. And every time it tried to wake up, one thing or another, whether it's GMON or GST or waffling on GST, RERA, and then the NBFC crisis, and then the economic slowdown, and finally COVID. One after another. It's almost like real estate as a sector is cursed in this country since 2012. We say in Tamil, Eram Naattu Cheni. I don't know what that is in Hindi. They say that something that comes for 7.5 years and it sticks with you and gives you pain. It's something like that, right? From 2012 to 2020, that's 8 years. Hopefully, we're going to turn back. Now, my question is, you launched Square Yards in 2013, 14 in this crisis. You've been in this real estate slow crisis forever, and you're born in this crisis. And you've done extremely well in this extremely long, choppy real estate cycle. What is your view on the real estate market? Where do you see the market go as real estate in this country?
So I think we got lucky. I still pray the market continues in slumber for another 3 years. This has been the best time for us to pivot, fail, learn, build market share, make mistakes without worry of being rolled over. Now, I'll talk about what the next 15 years could come. Let's say if the market was doubling every second year, there could have been giants coming in, steamrolling with $500 million of capital, and we would not have stood a chance to evolve, because we needed this time to evolve. We had never been entrepreneurs before. We had never done like the largest team Kanika and myself ever ran in our careers was 5-people team. And so running a 3,000 people organization is a learning in itself. We learn every single day, but we needed those years behind, those miles under our legs to get better at that. We're still not there. We'll still take time, and we'll continue to take time. But this was needed for us, being very, very selfish. Yes, it has been almost a lost decade for real estate. But it's a 15-year story. So let me share some numbers. I know India, China is a beaten down comparison in a lot of macros, a lot of variables, but it's very, very relevant for housing because we are not talking about the asset price comparison here. We are talking about the genuine physical need for housing, which is a function of population, nothing more, nothing less. China is today close to 60% urbanization, 55% urbanization, having gone through 2 decades of a serious real estate bull market development, still does 1 million new home sales a month. India, same population, 33% urbanization, significantly lower home ownership rate. So home ownership in urban areas in China is 96%, India is 56%. And even then, India does, you will be shocked, 20 to 25,000, this is pre-COVID levels, 20 to 25,000 transactions a month. In COVID, India did practically 5,000 transactions a month. And the sheer size of economy like India, the population like India, this is as ridiculously low as it can get. And US being a developed country, like everyone is supposed to have their own home. In US, they do 50,000 a month, 3 times size of India. Indonesia, with 1/3 of the population, does 3 times size of India. So the reasons are obviously a lot. So whether there was an asset owner's fault, whether it was government's fault, whether it was regulator's fault, the problem was the real estate in India was never rightly priced, rightly positioned. I don't think even today it is rightly priced, rightly positioned. India is not $1 million house market. India is not supposed to be a $500,000 housing market. India is supposed to be $70,000, $80,000, $60,000 housing market. India will explode. India has to explode over the next 15 years. Forget about the current home ownership. Just if the urbanization moves from mid-30s to mid-50s, we are talking about close to 300 million people moving into cities. Even if you assume a family of 4, we will need to build 75 million homes in the next 10 years, let's say. And India doesn't even build 500,000 a year. But what we believe at the base of this volume explosion will be an affordable market, will be the mass market, will be sub $100,000 homes. That's where 90% of the volumes will come. India may not see asset price inflection like most of the other economies have seen over the next 10 years, but India will definitely see the volume explosion. And so just the sheer size of the opportunity, and that's what I keep on telling my colleagues, keep on telling my team, all we need to do is survive. Just the sheer size of the opportunity and scale will make us 40, 50 times larger. India is a $100 billion market today. India was a $100 billion market in 2013 and still a $100 billion market. China was 4 years back a $1 trillion market. Today is a $3 trillion market.
Tanuj, how much of that growth in China is asset price increase versus unit increase?
So 70%, 2/3 is unit increase.
Wow.
So
that's huge.
So even if asset prices don't move an inch, the sector itself should grow 20 times larger, if not more, over the next 10 years. And then the part of the story is us gaining market share over a period of time. But I'm saying even if we do a very disaster of a job, let's say we are not able to execute well, just the market opportunity itself will make us 20 times larger.
Vast. So that should make everybody on this call feel good. That it's, and I'll tell you, I wrote all those bullets in the PowerPoint back in 2004-5 to go raise money about Indian real estate, home ownership per capita being so low, Indians want to own homes, all that same story. And then we went ahead and invested. And now 15 years later, you're still saying that the opportunity set is huge, 75 million homes left. So I mean, there's a lot of people doing a lot of things, obviously not so good, which has created still left a huge size of opportunity in front. And Kanika and Tanuj are going to go grab it. And we're happy we're with you as partners in this journey. Kanika, you wanted to say something?
Yeah, I mean, as Tanuj pointed out, India is gonna explode, and the strength which we built over the years is we strategically chose to be in the lower mid segment and affordable housing where the explosion would come. So the idea is to capture, build our strength in these tiring times where, we can make mistakes. And then when the market booms, we are actually ready to, go full steam.
Totally.
So another interesting point there, Sammy, Siva, is um, uh, we have seen Indian ecosystem, private equity venture ecosystem evolve in the last 15 years. But I am assuming you all will agree with me, not just in India, in US and China. Um, it's a chicken and egg story. The private equity capital chases a rising sector, and entrepreneurs chase the private equity capital. Like, you are suddenly seeing an explosion of people wanting to do edtech. Everyone wants to build an edtech business. A year and a half back, everyone wanted to build a fintech business. 5 years back, everyone wanted to build an e-commerce business. The reason we don't have we don't worry about existing competitors in the market. We do worry about some entrepreneur in a garage who is brilliant, sharp, who could probably execute better than how we did. We took 36 months to learn; they could learn in 18 months. But the probability of many people wanting to do that is very, very low because private equity capital does not exist in this space today. Will come at some point in time when the sector rolls on. Hopefully it happens after a couple of years. Again, I keep on repeating, I don't want next 2 years to be the bull market. Hopefully it happens after the next couple of years, but whenever it will happen, you'll see PropTech exploding the way it's happening in US, the way it's happening in China. So China's largest Lianjia, which was our inspiration when we started, has filed for listing in US, $36 billion
Ouch.
valuation.
Ouch. Ouch. We like that. We like that. From your lips to God's ears. We hope we reach there. And I have every conviction we will with the two of you at the helm. Now I want to ask you a question about NRIs. NRIs formed a meaty chunk of your business. They were about 25, 27% thereabouts when we did the deal. These are NRIs largely in the Middle East and a smattering of NRIs in other parts of the world as well, using the Square Yards platform to buy property in India. How is that percentage today? Have more NRIs come on board, or are more Indians coming onto the Square Yards platform? How has that changed?
So just relating that to why NRI for us. Why NRI was very, very important, because like I briefly touched upon earlier, we in India, we were effectively in early days, we were fighting with a million smaller unorganized guys. So from a developer's perspective, no one player was important. And to create scale, you needed to have that bargaining power versus your principals in the space. So we saw NRI as a lower hanging fruit. Effectively, we could go, every developer wanted to go offshore. And if we could provide the viable platform which can take them offshore, we could extract more bargaining power in that relationship. So that's how it started. Eventually, we realized that it was a virtual monopoly because they were not even smaller unorganized guys in that space. To share some numbers, so this is pre-COVID. 1 out of 10 transactions by NRIs in Middle East goes via Square Yards. During COVID days, that number became 4 out of 5. So this has been the level of consolidation over the last 4 months, which thankfully is because of some significant mind share. I think more than the market share, there's a significant mind share in these economies which Square Yards enjoys. So to answer your question, NRIs have become a sizable chunk of our distribution mindshare, especially during the COVID time, considering they are significantly, predominantly an investor asset class. Most of our onshore consumers are an end user asset class. If I were to talk about exact percentages, it will be close to 50-50 during the last 5 months.
Wow. That's and that was entirely possible because you already had them on board and this platform was well known to them. So they just doubled down on it during this period.
Right.
And a lot of our customers now are repeat customers who buy multiple property from us. So there is already that trust. There is already that penetration into the market. There is a lot of referral business which comes due to the goodwill and the results which they've seen by investing on our recommendation. So that builds in more confidence. And obviously digital marketing is something, since that's been our expertise being a prop tech, so we were able to penetrate even further using all the channels which we deploy here.
So share some number again for this asset class. It's very, very critical. In this asset class, our repeat client business is almost 17%. Is very, very high considering the notion that people buy homes once in their lifetime.
What is that number?
17% of our clients come back and buy again.
Wow. And how many of those are NRIs versus people in India?
Almost 60%, 70% rather of them would be NRIs.
So the NRIs are more frequent repeat customers than people in India, which would be expected because they're buying for investment purpose more so than for living. So no, this is good. The NRIs are a very large group. I believe the total Indian diaspora outside India is north of 80 million if you take the whole world. And at some point of time, when all these 75 million homes get built, several of the parents and children of those people will all be living all over the place around the world, and they could come in through the Square Yards gateway. That could be very good business.
And plus it gives us offshoots into the new businesses. For example, property management. So we have done close to 15 to 20,000 transactions outside India in the last 6 years. A large chunk of these captive clients would be our target audience for property management business because they don't stay in India. They want someone who could manage the platform for them. It's an organic customer acquisition for free for us. The largest property manager globally, which has been funded, which is private equity backed, has only 30,000 homes under management. It's a north of $1 billion plus. So I'm saying there are massive synergies which come from NRI because your control over their value chain is far, far, far more stronger.
This is good. Lots. I've learned a lot. Okay. One question, and this is a question on behalf of everybody in this group before we start taking group questions. As I mentioned when we started, everybody in the audience here, every single person is either an investor in real estate or they live in a home that somebody in their family owns or somebody in their family own a home. So we're all in the real estate asset class, for sure. Tell us, what's your view? Was this a good time now after a 8-year flat or down cycle to enter into the real estate market, or should people wait? What's your view?
So in India, real estate is an emotional asset class. Let's accept that first. We grow up with the whole idea of buying our house when we get our first job, or worst case scenario when we get married, or worst case scenario when we have our first child. We need to have a home. And it's fortunately, unfortunately, by the sheer size of the value, it is 40 to 50% of our wallet, right? Our largest investment, our biggest investment for an average middle class person. It's the largest investment in their portfolio. So that in India, because of certain reasons, those things have not grown well. Like rental yields in India in residential are 2 to 3%. Your cost of capital is 8 to 9%. Effectively, you have a negative carry of 6%. In plain normal vanilla language, you lose 6% by owning real estate in India, unless you see capital appreciation. Globally, real estate is not invested as a capital appreciation asset. Globally, real estate any real estate, whether commercial or residential, is a yield play. You have positive carry. In India, there was a dichotomy, and that is why a part of this slumber, a large reason of this slumber over the last 10 years has also to do with this disconnect between the returns and the cost of capital. Because the moment capital appreciation stops, people stop making money. So even though you are an emotional guy and you have bought your home for your own end use, since it's a 40-50% of your entire wealth, you have effectively spent 6 years without your wealth growing, without half of your wealth growing, adding a single dollar to the portfolio. And that is why when we go and meet investors or even end users, our thought process starts from numbers. We tell them it's fine. We understand you want to buy your home. You want to buy a home for your own end use, but that home for you has to make money over a period of time. Would if I tell you that you buy a house which will give you zero return or negative returns in the next 10 years, would you be interested in buying that? They say no. That's like that's why more than before looking at the floor plans, before looking at the view, before looking at multiple other emotional touch points or data points, you should look at the hardcore data points, which is a micro market which will do well. What is the potential supply and demand in that micro market? Why Gurgaon did well for so very long? Which is the next Gurgaon in India? I think people miss a trick where people will go and invest in assets in micro markets which are seeing significant development on the residential side. History says that any residential micro market has the least capital appreciation unless there are jobs in that micro market. Greater Noida is a brilliant story in India. I think no other micro market beats that infrastructure, and that has given the terrible returns in the last 15 years because there are no jobs. So on the other side, you have a segment like Hinjewadi, which has tremendous commercial potential, and residential is only now coming into it. So wherever you are, whether you are in India, whether you are in US, whether you are in China, your best returns will be a function of micro market. Best returns will be a function of everything we have learned in finance since our childhood: supply and demand, and how much is the supply, how much, and that's how basically we start. So our thought process is, if when we figure out these are the 5 top potential micro markets in India, 2 top micro markets in any city, then we go and find the best assets in terms of the developers there. Then we structure the payment plans there. So idea over this entire exercise is how much, yes, people would go and live there for the next 15 years, 20 years, but in that process, how much returns they'll make. And those returns have to justify spending 50% of your wallet. Those returns should ideally outperform and outrun any other asset class.
But do you go through this kind of a consultative discussion with your clients when you do the sale?
Right.
Wow.
So with every so we track real time 150 odd data points for close to 9,000 projects in India, and that gives us that's A, scale, B, data, C, enough knowledge around the sets which make sense effectively, which will potentially drive the returns over a long period of time.
Very, very smart. Because listen, I hear you. I know cap rates are so low in India, especially in the large cities. I don't know if they're any better in the smaller areas. Cap rates are so low. I have not lived in a home that I owned in India ever. I've never lived, because it just doesn't make economic sense for me. My dollar produces a better return somewhere else. But the reason I ask this question is, several people have told me that during COVID, real estate prices have corrected. Several developers want to sell at a discount. Is it a good deal, not a good deal? I didn't have an answer. And I wanted to get your view for the benefit of our people. If they're thinking something in that direction, or their friends, their families are thinking in that way, it's useful. So all they need to do is just come to Square Yards and you will give them the answer, right?
Definitely, we'll definitely sell them a home each. Last 5 months, we were, so Square Yard was close to 20% market share in Indian real estate in the last 5 months. So 1 out of every 5 homes across India was sold through Square Yard. So that's what consolidation. Even our share with the largest developers was north of 50%. So we practically structured their products, we ran their campaigns, we controlled their entire value chain. And I can tell you, every single product we sold in the last 5 months, not even a single rupee correction had happened in the prices, the counterparties, and they were sold on the back of beautiful payment plan. and they were sold on the will make money. For example, we came up with this innovative at the bank, a large developer with strong balance sheets, asking clients that you take a call option in real estate, you put in 10% now. There are 3 years or 3.5 years to the delivery of an asset, and the cycle will turn during these 3.5 years. Effectively, if the asset goes up 10% in 3.5 years, your ROE is 100%. And the response was phenomenal. So that's what I'm saying. So in India, in the last 4 months, 80% of the sales were the sales in the assets with zero price correction.
I think it behooves, and Siva, please comment on this for us. Shouldn't we come out and tell the market in the paper that Square Yards is the leading destination from which people bought real estate in the last 4 months? It is something that people don't know, and that builds trust. If people trusted you during COVID, during a time of anguish and difficulty, they trusted and they went through your process and they got it. I mean, that needs to be told, Kanika. The market needs to know that, and I think that will bode very well for you when the market comes back for people to come to your platform. Something we should think about.
Definitely. And Sammy, what we did during this COVID time was, traditionally, most of the real estate was sold in one-to-one meetings. So there was, significant physical contact needed, which we tried to, change. We overnight moved the entire, journey online, where, we created infrastructure where we got inventory online. We did digital transactions. We integrated payment gateway. So we had all the infrastructure. This was the best time when people actually started using it. So overnight, we saw that, people can see the properties on our platform through the 3D tours. They could see the inventory live. They can go in details of, analyzing one property versus another and immediately transact.
Oh, this is
so was there a human involvement? Yes. So earlier there was supposed to be the face-to-face meeting, which got replaced by a Zoom meeting. But anything which could go digital in the value chain went digital effectively.
And that's, that ability to swiftly adapt to an environment really has got you this excessive market share during this time. So, Siva, you were saying something.
No, thank you, Kanika, and thank you, Tanuj. Some great insights, definitely, on the PropTech business and how it's shaping up. And thank you, Tanuj, for a lot of data, and it's very interesting to know that means that you sold about 1,000 units a month during post-COVID, because as you said, 5,000 units was what was sold during the COVID period. You made an interesting point that urbanization is inevitable. And my question is that in a market like India, and you're absolutely right, India is the single market, I think only market in the world where asset is bought for an emotional reason. A chat hona chahiye, some chat hona hai, and that's the reason it's bought. But now, and most of the time, the decisions around real estate was always taken based on the need of human beings as a social animal to remain in clusters, urban clusters, close to proximity of the office, markets, or the supermarket. The clusterization approach was there. So my question is that because of COVID and because of this need for suddenly the location is no longer a constraint. And the greatest example is this call. And we all could attend.
Right.
There's nobody was missing it. Nobody had to travel. We all could come at, finish the previous meeting at 3:55, join at 4. So my question to you is that will the urban clusters continue to remain, because that's the reason for demand, that's the reason for supply, that's the reason for pricing, or are we going to see spread out of clusters, people choosing to, because today you made this point that the 50% of the wallet goes into housing. But tomorrow, more than 50% of our time is also going to go into the home, residence. So with this change being inevitable between Kanika and Tanuj, what do you think will be the transformation of COVID? Or will being social animals will go back to exactly what we were after 6 to 9 months?
So
thank you.
I might ruffle a few feathers here. I am not in the camp which believes life will change. I am not in the camp which believes that work from home will become such a predominant characteristic that will change the way we live. I've seen that real time happening in Dubai. I'm seeing that happening in UK. I'm seeing that happening in any economy which is opening up. I think we significantly underrate human resilience. Give it 6 months, give it 8 months. The day economies open up, the day Indian cases go below 5,000 a day, go below 2,000 a day, you will see 90% of the life going back to normal. That is what I believe. I don't believe developers should build a different product. I don't believe, because effectively the product you are building today is going to be delivered 4 years later. You can't forecast what's consumer gonna do in 4 years. You can't even forecast what consumer is gonna do in the next 2 months. So I think, but there is no right answer to that, Siva. It's like sharing economy versus own home, sharing a home versus own home. So I think 6 months back there was a lot of talk about sharing economy. There was a lot of talk about people will stay in short-term or urban rentals. People will not want to own homes. Everyone was gearing in that direction. Now suddenly everyone is gearing in totally opposite direction, that everyone want their own home. Everyone want a bigger home. Everyone want a room where they can work. I believe we as humans sway a lot. We try and understand our customer. The best learning I had during COVID was we can never understand the consumer, and don't even try to understand the consumer. Just see the trends and react to it. Just execute. Just improvise. So I believe both are overrated. Both extremes are overrated. Even if for a short period of time you will have a significant work from home culture, like you yourself said, social needs. So there's a human's innate quality or need to change. So over the next few months, they will suddenly believe that no, we still need to go into that 9 to 5 culture. We still need to interact with people. There is a lot of emotional growth which happens there. There's a lot of social growth which happens there. Never say never. But I don't think there are significant trends which can be forecasted based on what's happening in the last 2 months.
Thank you, Tanuj. Kanika, I would like to add to your views. We would like to hear your views as well.
Yeah. So I would say the best is to live on rent, because as the economy moves and changes, you can always upgrade or downgrade your house. So buying a house is like getting locked, getting you capital long term. So if you think that, the economy is gonna stay long term in this mode, upgrade to a bigger house, pay slightly more rent where you can have your own gym, have your own office. And if you see the economy opening up, you can always, continue living there or downgrade or, just pivot according to the flow.
Right. But one thing, Siva, irrespective of how work culture changes, people don't realize the importance of infrastructure to the urban centers. A lot of people don't realize that infrastructure is inversely proportional to the real estate asset growth. Is not directly proportional. The better infrastructure you have, your concept of urban centers, downtowns, dilute. Ahmedabad is one of the best infrastructures, and the prices have not gone anywhere. Let's say hypothetically, it will take 20 minutes for someone to travel from Mira Road to Fort. No one would want to live in the South Mumbai. People could go and live in Mira Road. So the prices, the asset prices equalize as and when the infrastructure will improve, and that will be the story of India in any case over the next 10 years. So you would see 100 cities emerging as the core rather than 7 cities or 8 cities. Within a city, you will see multiple downtowns emerging rather than a single downtown or single commercial center. So that definitely probably will happen over a long period of time.
Thank you, Kanika and Tanuj.
That's a very interesting point, Tanuj, you said. When I studied land use years ago, I studied the West German, Federal Republic of Germany, land use of this country, how they built, they dread a city more than 2 million people. They want to have multiple cities, Hanover, Dusseldorf, Hamburg, Dortmund. They have all these cities. If you look at the industrial belt, the Ruhr Valley of Germany, 2 million, they say, and then they organize their infrastructure in such a way that you can go from one to the other, live in one, work in the other. And so you manage the cities and the urban areas very well. The point you said about Mira Road, South Bombay, and the infrastructure improves, people can live in one place and work there, got me thinking. Many of those changes, and I always believe that there is some conspiracy between infrastructure development and real estate prices. It's only a fantasy in my head that if you develop it too fast, if we build a true high-speed train from Pune to Bombay, God bless our real estate prices in Bombay, right? If we build a true high-speed classic train, but is there any connection between the two? I don't know, but I think I think about it. So good. Partha had a question he mentioned to me on a chat. Yeah, Partha, go ahead.
Hi, Kanika and Tanuj. Thank you very much. It's like a very clear and open talk. Really enjoyed listening to you guys. I want to ask you the same question, like which you spent a lot of time on, which is the disparity between like rental income and your investment, and therefore a negative carry. I had joined from campus a bank, and I had a legendary boss called Jerry Rao. He told me one day that, listen, you can never afford the house you are supposed to live in. So like, this is India. You are supposed to live in a kind of house which you can never afford. So I kind of understood what he meant at that time. But my question to you is, therefore, one, I understood that yes, with urban infrastructure increasing, this disparity will go down. People would eventually get a rental income of 5%, 6% and stuff like that. But other than infrastructure, do you think it's primarily driven by inflated pricing of the real estate sector, and that will also get corrected and bring it back to 5-6%? Because without that, the market will never really open up. Anybody who's half intelligent will not put in money in like real estate, saying that mere paas dusra ghar hai, and all those are nice, but suddenly when you look at the return, you see you are taking negative carry. So other than infrastructure, what do you think are the factors which will correct this, and kind of how long do you think it will take?
So price is an important factor, obviously, just by the sheer math formula. Price goes down, yields goes up. Inflated, should prices come down? Yes. Are prices inflated? No. I'll tell you why. I think people don't realize that in India, a large reason for prices being where they are and not being ideally in India, asset prices should be 40% lower overnight. That's a healthy economy. Why they don't go down, or why they're not there yet? A lot of indirect costs. I think there's not so much to do with the direct cost. Developers don't have room to cut prices. Most of the developers operate on thin margins, single-digit margins. I think as a brokerage player, we make much more margins than a developer. The problem are indirect costs. The problem is land. The problem is input. The problem is stamp duty. The problem is we have seen a lot of hue and cry in media with few prominent personalities coming in and saying that developers should slash prices 20%, 30%, 40%. Government should come and slash the stamp duty for 6 months to zero. Let's see. That will be a phenomenal demand coming back to the real estate space. Government should slash the long-term capital gains tax. It's punitive, having a 20% long-term capital gains tax. It's illogical. It's irresponsible. No other economy would ever see that. Why are you penalizing anyone to hold an asset for the long term? After 10 years, long-term capital gains tax should be zero. We all are aware of the black money and the whole reason demon came. We all know that the largest source of that was real estate, and the largest source for that was the taxes, were the long-term taxes. People who have owned their asset for 20 years, their capital appreciation has gone up, their capital values have gone up 50 times. They want to save taxes. Just don't give them that indirect incentive by not having a long-term capital. So multiple things regulators could do, government could do to bring down the prices. Whether the prices should come down? Yes. In any case, we are seeing a time correction. Last 8 years, nothing going up is a time correction. That time correction probably continue over the next 3-4 years. But a faster way to pull demand back to this space, and demand has to be pulled back to this space if India has any inkling or any aspiration of growing at 7-8%. You have 50 million people employed in the construction sector. 5% of your GDP comes from this sector. You can't have a 7% economy growth without real estate doing well. And part of that can be driven is in the hands of governments itself.
So, and Tanuj, do you see there's an audience question from Sudha, Sudha is in response, who Kanika, you might have met or talked to, Tanuj, you too. The question is, should developers put their prices down to get inventory out? Should they to sell inventory? But what you're saying is their margins are so low, if they lower prices, they'll be losing money. That's what you're saying, right?
They'll go bankrupt. They'll go bankrupt. So they are neither here nor there. They need to sell the inventory to get the working capital. You don't have regulated debt markets for developers. Developers don't get debt. Developers get ridiculous. If they do get debt, they get debt at 20-25%. That is ridiculously high cost of capital to build an asset. So and if they reduce prices to sell inventory, they'll be making 20% losses. So what do they do?
It's a dilemma. It's a dilemma. So I got the formula. Put off stamp duty for 6 months to a year. Get people back into the real estate vertical. Remove long-term capital gains taxes. I hope the finance ministry. I hope this interview will leak, and I hope they get this recommendation from you, because I'm a big supporter of those two things, and I think the stamp duty is oppressive. It's absolutely oppressive. Even very nicely developed markets like the United States, where the whole process of buying a flat or a home is nothing compared to India. All online, all simple, all can be done from a different place, no fingerprinting, nothing. And that whole thing is done for no stamp duty. I mean, what, couple of $1,000? Total closing cost is $30,000 for a $2 million home. It's yeah, we need to move in that direction. Now, you think that is the stamp duty and all these costs are so high. Is that simply because the government wants to lace their exchequer with money and they can't get it in another place and they see it here, they get it? Or is there another ulterior motive to keep the availability of homes low, to keep the prices high?
I think neither. They just never thought about it, I believe.
Okay.
It's something. It's like it's a resistance to change more than anything else, right? It's like one fine day we need a proactive government where one fine day they are not afraid of taking drastic measures to kickstart a space, kickstart a sector, right? You don't need to wait for the annual budget to be able to do that. You can do that tomorrow. So real estate is a state subject, right? Every country, not just in India, in every country, real estate is a state subject. It's a social subject. Governments want people to be happy, right? So no government wants a bubble. So a lot of my friends ask me whether they should put money in London or New York or Australia. I tell them, follow the government. One clear way to invest in real estate and make money, follow the governments. If the governments want real estate prices to go up, they will go up, whatever happens. If governments want real estate prices to go down, they will come down, because the governments have so much indirect regulatory taxation, cost, power to be able to do that they'll do anything and everything to control that. So 6.5% stamp duty in India reflects of a time when the real estate were doubling every second year, and which was very negative socially. You don't want to live in no government would want a scenario where no one can afford a real estate. And that's when you try and implement all these measures to correct that. But parallelly, when the sector is struggling, when no one is buying, you give those things as a catalyst as well. In India, unfortunately, if we decide something, nothing changes for 10 years.
It's clear. I know we are past our 5 o'clock. I'm going to throw one more question at you, Kanika and Tanuj. Do you think the leading developers in every market across India, part of the point, part of the question you answered already by saying their margins are razor thin and they're struggling to be above water at this time. Do you think in the end of this, there'll be some reordering? The top 10 will look quite sharply different in many markets across India?
In many markets, and they will look much bigger as well. I don't know who those top 10 would be. We have a fair idea who those top 10 or top 20 could be. So today, top 10 developers in India are less than 5% market share. It is, as again, repeating in sync. It's like it doesn't happen anywhere in the world, nowhere in the world. No emerging market, no developed market. Typically, top 20 developers are more than 50% market share in any market. And that consolidation will happen in India. RERA was an amazing. I think RERA was the need of the like when we got into real estate, we always knew RERA has to come. When was the question? It was not the question of if. I think that's the single biggest game changer the sector has seen. Obviously, it will evolve. It is still not there as the final product, but a significant first product. So with the regulator coming in, controlling the dark practices, controlling the entire consumer trust, money flow, you will see massive amount of consolidation over the next few years. COVID gave a peak into it, and which is exactly what happened. So grade A guys practically cornered almost the entire market share. So in probably 10 years, you will see top 10 guys, top 15 guys, 50-60% market share. People who are more aggressive will win the race. People who have better balance sheets will win the race. People who have built stronger brands will win the race.
Well, on that note, we wish Tanuj, Kanika and Tanuj to become the go-to place where every Indian that aspires to buy a home, or every Indian, every NRI, when they choose to buy an investment property, go to. And we are committed to working with you and helping you reach that destination and that goal. I want to thank you both. I know we went past time, but I warned you already yesterday that we will go past time because it's such an important topic. There are always many questions. I still have a half a dozen additional questions and still some are coming about what you will do with co-living and various other things. So we will get those to you in an email. I want to thank you both and let you back to your offices to do your good work and keep our shareholder value going up. We're very, very thankful.
Thank you.
Okay.
Thanks everyone for having us.
Thank you so much, Kanika.
Very,
Thanks, Shiva.
very nice.
Thanks, Partha.
Thank you so much.
Thank you.
Kanika. Thank you, Tanuj.
Thank you, Tanuj.
Thanks, Partha.
Bye-bye.